Hello there and welcome to our market review, where we're going to have a look at the general stock market, precious metals including silver, and a quick look at Bitcoin. Starting with the general stock market, looks like the previous intermediate cycle was relatively short, consisting of only a couple of daily cycles. That does happen sometimes. That previous intermediate cycle lasted for only about 3 months. This new intermediate cycle has been going on for 60 days. That's still pretty early for an intermediate cycle, which usually lasts for around a half a year. Zooming out over here, I indicate intermediate as well as daily cycles. So in the intermediate term, I do expect the general stock market, S&P 500 is what we are looking at the moment, to continue higher and make new highs. But in the shorter term, daily cycles usually last for just around a couple of months. This ongoing daily cycle is already 2 months old, it's 60 days long. Hence, I do expect a bit of a correction maybe over the next couple of weeks to come down into the daily cycle low before the intermediate cycle continues higher into its top, perhaps within the second daily cycle. Zooming in a little, you also might see a bit of a narrowing wedge forming over here, and usually, statistically speaking, these narrowing wedges are a bearish sign, meaning that a breakout from this narrowing edge is more likely to the downside than to the upside. And considering the longer term, this recent relatively steep drop down during this year into this tariff scare and a quick rebound, doesn't it remind you what happened in March 2020? Again, a bit of a quick, very steep drop down into that pandemic low and a very strong recovery. And zooming in to have a look at the similarities, we see that while the intermediate cycle after that pandemic drop continued to make noticeably higher highs, there was a bit of a correction down into the daily cycle once we saw a couple of pokes above widening Bollinger Bands, with the daily cycle topping not far from those previous pre-pandemic highs. One might argue that something somewhat similar is happening right now, perhaps a repeated poke above these Bollinger Bands over the next week or so, before a decline down at least into that daily cycle low to potentially retest the 50-day moving average, perhaps around 5,700 on S&P 500. Again, that's the short term, while the intermediate term outlook is still bullish, as the intermediate cycles don't usually top after rallying for only a couple of months. Here we're looking at the market sentiment, which has already swung quite a lot from around the level of 11 to above 70 recently. A bit of a correction over the last couple of weeks, but we're still above 60. I do expect a bit of a further decline again down into the daily cycle low. And that is the stock market. Moving on to the dollar. There is a pretty good chance that dollar has finished with its intermediate cycle back in late April, in which case dollar will generally trend higher over the next couple of months into the top of this ongoing intermediate cycle. But there is also a pretty good chance that the dollar hasn't done with that decline into the intermediate cycle. Perhaps one more dip into the level of 97, which used to be support all the way back in early 2022. With a likely positive divergence on RSI, that is a higher high on RSI versus a lower high on price, which usually precedes a bit of a turnaround. In that case, dollar would start a new cycle relatively soon, again gradually rising over the next 2 to 3 months. But I don't expect a particularly strong dollar, perhaps a retest of the previous support zone, somewhere around the level of 103, and that's also pretty close to the 200-day moving average. By then, this 200-day moving average will also decline into that same area, and that also would be a bit of a convergence with the 50% retracement, with all of that triple convergence perhaps suggesting that dollar might have a bit of trouble breaking through 103 even at the top of this new intermediate cycle. And likely dollar strength over the next 2 to 3 months might actually put some pressure on precious metals. Silver, most recently over the last week or so, has finally broken above this resistance zone around 34.8, around $35. That level did serve as a relatively strong resistance for at least a couple of intermediate cycles, for at least a year or so. But most recently, together with the rallies in silver, juniors, this is an example of Montage Gold, are rallying as well. we talked about juniors with the members at My Finance Teacher relatively recently, including the discussion of Montage Gold, which we first mentioned at myfinancesteacher.org all the way back down at the price of around $0.50. So with the recent poke to about $3.50, that would be a bit of a 7x rally. I think anybody would be happy with the 7x returns. And of course, it also is prudent to reduce your allocation once such returns are achieved. Again, for more details on some of the most interesting juniors and on particular trades we're doing, make sure to join us at myfinancesteacher.org. What I wanted to say looking at silver is that unfortunately silver usually outperforms gold significantly, pretty close to the intermediate cycle tops in precious metals. Let's have a look at this ratio of SLV to GLD, basically a ratio of silver to gold, which is in blue over here. And the red line, dark red here, is gold price. Gray columns indicate a bit of a spike in this ratio, meaning that silver becomes significantly more expensive versus gold itself. And pretty often, of course, not every time, but pretty often these spikes do come close to those intermediate cycle tops in gold. It didn't really happen over here, for example, at the end of 2022, where after a spike in silver, gold continued noticeably higher, with GLD continuing to rally from around 168 all the way up to 181 before it dropped down into the intermediate cycle low. So this doesn't always perfectly align with the intermediate cycle tops in gold, and we are going back to the pandemic drop on this chart. But quite frequently, silver does spike before gold starts a bit of a decline down into the intermediate cycle low soon after. Zooming in here on late 2023 as well as 2024 and this year, again a spike in silver versus gold in late 2023 with only a very modest correction in gold price, a bit of a sideways consolidation instead. Same again in early summer 2024, spike in silver versus gold, with gold only correcting very modestly. Another spike in silver versus gold, that is in October last year, and gold again correcting relatively modestly for a while after that. And of course, look at what's happening right now. We see a significant spike in silver versus gold. So while nobody does know the future, if history plays out as it usually does, there is a bit of a risk of precious metals correcting down into the intermediate cycle low, perhaps over the next couple of months. So let's look at gold here, and I see a couple of scenarios, mostly depending on the question whether we have seen the intermediate cycle low in early April on gold. If that has been the intermediate cycle low, putting a check mark over here, then our new intermediate cycle is still relatively young, lasting for only a couple of months. In that case, I would expect gold to break out of this declining channel to the upside, creating a new higher high and perhaps the top for this ongoing new intermediate cycle. On the other hand, if that decline down into early April was not a more significant intermediate cycle low, but only a daily cycle low, then our intermediate cycle is already very old at 204 days long. These intermediate cycles do stretch for over 250 days sometimes, although usually they last for around half a year. In this scenario, I would expect gold to decline down at least to the lower range of this declining trend line, perhaps test 2900, as well as this 200-day moving average over the next several weeks, which would sort of align with this spike in silver versus gold, suggesting perhaps that the rally in precious metals is coming to its peak, at least temporarily. And lastly, looking at Bitcoin, again, a couple of scenarios there. Perhaps that recent drop down on the 5th of June was the end of this daily cycle on Bitcoin. Usually these cycles do last for a couple of months, and that drop coincides with 59 days. So that would be pretty likely. Plus it has tested the 50-day moving average. That might be enough. I would give this perhaps a 40% chance. But looking at crypto fear and greed index, showing that back on the 5th of June we've only dropped to the level of 45 on this crypto fear and greed, with this cycle declines in Bitcoin coming all the way down to usually the level of 30. Hence, unless this is going to be a very modest correction again, something similar to what we've seen at the very beginning of 2025, unless it's a very modest correction, I would expect another short-term drop in Bitcoin, likely testing the 200-day moving average, before Bitcoin starts a rally into a new cycle, with this scenario perhaps having 60% chance. And that is all for now. Have a wonderful weekend. For more details, make sure to join us at myfinancesteacher.org. Have a nice day. Bye-bye.